What would you say to the buyer who's fearful of jumping in, though, on the theory that it's still headed down?
Well, I think that buyer, I can certainly feel for that buyer. It's a very difficult decision. Home purchase is probably one of the largest economic decisions any of us make in our lifetime, and to be doing that in a period of uncertainty is even more challenging. But as I would say again, you have to look at what the statistics are really telling you about the Chicago market. And prices have remained relatively stable in Chicago throughout this entire period of economic uncertainty, unlike the other markets in the country where you had dramatic swings in pricing, large part because in those markets prices were run way up in an artificial sense, so they were subject to this collapse. That's never really happened in Chicago, where you had the huge market increases over the last 5 years that you've seen. So prices have stayed more stable, and in fact, in the most recent quarterly reports, prices are actually starting to inch up a little bit in Chicago. So you couple that with three other factors. The most important of perhaps is what's happening to mortgage rates. And mortgage rates are starting to go back up. In the last week, mortgage rates went up 30 to 40 basis points. So that means basically we're approaching as much as a 0.5% increase in mortgage rates. And so that's not expected to turn around, with the Fed's focus now being on inflationary control as opposed to economic stimulation. Nobody certainly expects any more decreases in interest rates, and in fact, there are many people that are forecasting additional increases in interest rates. So if you're a buyer that's ready to buy, sitting on the fence, saying, I don't want to buy because I'm afraid prices are going to drop or the market's going to move away from me, you have to really question whether or not the statistics support that. And I would argue that they don't, that the pricing has been stable in Chicago, is going up, and what you're looking at is the prospects of that remaining true, but mortgage rates moving in a direction that's not favorable to you as a buyer.
Well, that's a little bit too rational of an analysis for me, Paul, because I'm old and cranky. And what I would say to a buyer, and I'm going to ask you to react to it, if you would, is get over it. If you're planning on being in a place for 3 to 5 years and have the comfort of being able to do that, do a rent-buy analysis. If you can't rent the property you want and you have to buy, or if it costs you about the same to rent, just get over it and buy. What's wrong with that emotional approach to it?
I think there's nothing wrong with it emotionally if it's backed by facts, and I think the facts also back the emotion. I do too. I think that when you say get over it and buy, the underlying question is, well, where will that find me in 2 or 3 years if I do that? And most people, even the most conservative economic,
who knows?
Who knows? Well, I wish everybody had the same leap of faith that you do, Joe, and was willing to just, throw caution to the wind. But I can certainly understand, as I said earlier, that buyers are fearful. So you have to ask yourself, what are people saying about the long-term prospects of a market? And I don't think there's anybody that's saying that the recovery is any more than 8 months. Let me go back. I don't think there's anybody saying that the recovery is more than 18 months away. Most people are projecting that it's going to happen at the end of this year and into the beginning of 2009. So that if you're really talking about being in the house you buy today, 3 to 5 years from now, chances are it's going to be worth more than it is today for a variety of reasons. 1, the economy will be better. 2, the real estate market will have stabilized. 3, a lot of the projects that would normally be coming into the pipeline at a time like now are not, because of the credit crunch's limited access to capital. So fewer projects are going to get off the ground. So supply will tighten, actually, as we move through this current inventory reduction phase, and prices will go up significantly, and many people feel, in 3 to 4 or 5 years. So it is a good rationale, as much as it may be emotionally driven, to say, jump in now, do your best to negotiate as good of a value as you can today, remembering that prices aren't down dramatically in Chicago, so you have some leverage, but not the same as you might if you were looking for a condo in Miami right now, where there are 200 units for every buyer in the marketplace. And once you do that, pick a home that's going to allow you some advantage at resale. And we would argue at Motorola Lofts, that is a product that's unique in the marketplace. There are certainly many high-rises, lots of mid-rises, and when you look at those projects, those units look basically the same when they're compared to their other competitors that you might be selling against when you're reselling your unit down the road in 3 to 5 years. So we think that homes that are unique like Motorola lots are going to be exciting to live in today, but are also going to give you a resale advantage down the road.